I'm Stevie Toups with Turner Industries, and I cannot tell you, so proud to be here in front of this audience. This is such a phenomenal event. It's also a phenomenal event because so many people are suffering right now. And the focus is on let's get business done because business is going to help everybody succeed. Kudos to all of you for making it here. I know it wasn't easy. We've been hearing about some really cool things that happened in Pasadena, really cool things happened in the Houston Ship Channel. I want to bring two to your forefront. Think early 1970s. I may be the only one in here old enough to remember that far back, but if you think back to the early 70s, two phenomenal things happened in Pasadena. One, Gillies. The other, Turner Industries. And we brought a little bit of Louisiana to Texas. And we found out that Texas likes to eat and have a good time just as much as we do, if not more. Please join us all on behalf of the Turner family and employees. Join us tonight. Show us how to eat and have a good time. Look, I'm here to introduce a great panel that will walk us through Petrochemicals 101. It's an explanation of the Gulf Coast, tying it to a global market and showing us what that footprint can mean and maybe a couple secrets kind of behind the curtain of BASF's view of how they look at it. I'm going to introduce two people. One, Heather Remley, the other, Andre Vierden. Heather is somebody who has spent 2 decades in the chemical business, initially with industrial gases, now in chemicals. But her training for chaos and her training for excellence came as one of 6 siblings. She will tell you that she's not traditional, probably not politically correct, but that's where she learned family first, take care of what happens. She's somebody self-proclaimed. I said, what do you do for BASF? She says, I lead people, I manage the business, but for 20 years it's been a customer-facing solution. That's what she does. It's very, very interesting to hear their talk. She's got a diverse background, marketing, operations, and engineering. No one's going to look at her and say, well, you can't do this or I can't do this, because she can turn to you and say, oh yeah, get out of the way, I can take care of it. It'll be very, very interesting. Houston, China, around the world and back. She'll tell you her biggest accomplishment, although I got a resume as long as my arm, her biggest accomplishment will be her husband and 3 fantastic daughters. Also, Andre Vierden. Andre joins us from Germany and is here, been in the chemical business also 20 years. Moved into chemicals in 2000, joined BASF in 1997, chemical sector in 2007. Obviously from across the world. Interesting, Andre is quite a sportsman. And all of us try and start our meetings, we have a safety moment. BASF has safe start. I should know that, golly. Safe start, BASF has safe start. If you've ever been in a meeting that Andre led, it's because he brings a safe start that is usually an example of some incident that happened on a bike trail or a running path where it was a near miss or a near death situation for him. Wife and 2 children here in Houston, 2 phenomenal people to share their wisdom and a little behind the curtain for us. Please welcome Heather Remley.
Thank you, Stevie. So it's truly a pleasure to be here this afternoon to share with you a topic that interests and involves all of us, and that is the transformation of the petrochemicals industry in North America. The petrochemical industry is a strong, resilient, and growing industry, and that's recently evident in the wake of Hurricane Harvey, where producers had to shut down and restart plants with infrastructure damage, logistical challenges, as you've heard from the port, and certainly a wide base of impacted employees. The industry has had to adapt to global changes and a changing U.S. landscape. Short term is in the case of Harvey, and longer term in the face of globalization. The regions around the world are differentiated by their raw material cost base, And access to raw materials, as you heard earlier, is becoming an increasingly important factor in the competitiveness of the industry. With these challenges in mind, we'd like to tell you, at least from the BASF perspective, which levers we believe are the most important from an industry perspective and a government perspective to continue our collective strength and focus to grow this industry, particularly in the US and in the Gulf Coast. So who is BASF? BASF is the world's largest chemical company with annual revenues in excess of 67 billion US dollars. We have a global presence operating in over 80 countries around the world with world-scale major facilities in the US, Europe, Asia, and South America. Our employee base is 114,000 strong and growing, and this employee base contributes not only to our success as a company, but to our customers' success. With a rich history that spans over 150 years, we are proud to say that BASF products are used in virtually all the industries in the world. And after all, you may remember from a few years back, at BASF, we don't make a lot of the products that you buy. We make a lot of the products that you buy better. So moving forward, our strategy is we create chemistry. It describes our ambition to strengthen our position as a growing and world's leading chemical company. We have 4 strategic principles. We add value as one company. Our Verbund concept is somewhat unique in the industry. Verbund is a BASF term that means fully integrated. We integrate our production and our technology know-how across multiple platforms to build synergy and a lower cost operating base, and this provides significant advantage to our customers worldwide. We innovate to make our customers more successful. We strive to align our customers' needs so that we can contribute to their success with innovation and sustainable solutions. Through close partnerships with our customers and research institutes, we partner and link expertise in chemistry, physics, biology, materials science, and engineering. Through this joint integration and collaboration, we develop customized products, functional materials, and system solutions. We drive sustainable solutions. As we all know, sustainability is an important topic today, and it will continue to be an important topic tomorrow. Sustainability and innovation are becoming strategic drivers and significant drivers of our growth. And certainly last but not least, we form the best team. Committed, engaged, and qualified employees around the world are the key to our success and the key to us helping to contribute to a sustainable future. We believe the creativity of our people will lead us to finding the best solutions for our global market needs. At BASF, we're focused on creating chemistry for a sustainable future. We strive to contribute to a world that provides a viable future with enhanced quality of life for everyone. We firmly believe chemistry is the enabler here, and the enabler to providing current and future needs of our society. This is the cornerstone of our strategy. There are many challenges the Earth will face. By the year 2050, the Earth's population will approach nearly 10 billion. While the world's population and the demands on the Earth will continue to grow, the planet's resources are finite. More and more people will need access to affordable energy, housing, healthcare, and quality food. This must be achieved while consuming less raw material inputs, be it land, water, minerals, or oil. Year over year, available farmland in the world is shrinking at a rate of 30 million acres. That's the size of the state of Mississippi. The average farmer today is feeding 30 times more people than at the time of BASF founding back in 1865. Now fast forward a bit to 2050, and ask yourself, how many more people does that average farmer need to be positioned to support? Chemistry will provide the solutions and the technologies to enable us to consume less input materials, become more efficient, and produce better products for the world's population. This incredible global challenge our society will face will also provide tremendous opportunity for the chemical industry. And that's exactly where ethylene and other petrochemicals fit in. They are the building block to create numerous opportunities, numerous innovative products to meet the demands of today and tomorrow's world. Earlier, I referenced the term Verbund, meaning highly integrated. And the Verbund principle creates efficient value chains that extend from basic chemicals to higher value-added products. You can also see the Verbund principle here in the Gulf Coast. Chemical plants are closely integrated with refineries and gas plants and NGL fractionation units for feedstock supply. Multiple feedstock, energy, and product connections exist between the various players in the industry to realize synergy and increase efficiency. And this is a strategic advantage and a competitive advantage for the U.S. Gulf Coast. BASF Petrochemicals is the heart of the Verbund. We produce the main raw materials to supply BASF's various value chains. Propylene produced at our steam cracker in Port Arthur is consumed at our Freeport site to produce acrylics and oxo alcohols. Acrylics are used to make paints and adhesives, and as well, they are the key ingredient to make superabsorbent polymers, the key material in diapers to absorb liquid. Oxo alcohols are further reacted to plasticizers at our Pasadena plant, and ethylene produced at our cracker in Port Arthur, Texas, is converted to ethylene oxide. It is then further processed for use in household products like washing detergent, cosmetics, and even used in the fracking industry in oil-filled chemicals. These value chains at our Verbund sites we're continually exploring how we continue to grow our investment capability. Some of our recent and ongoing investments include BASF and Yara International are building a world-scale ammonia plant at our Freeport, Texas site, with startup planned for later this year. At the BASF Total LLC Petrochemicals plant, we are enhancing production capabilities by installing processing and treatment facilities to further increase the integration with the neighboring Total Port Arthur refinery. And we've also started production of palatinol DOTP at our Pasadena plant by investing in dedicated production facilities. To support this investment, in 2016 alone, BASF hired over 1,300 new employees, both here in the Gulf Coast as well as in several states where we have a business presence. Petrochemicals are the heart of our Verbund. So to shift gears a bit and talk about the industry, where it's headed, what's happened in recent years, I want to talk a little bit about the different regions in the world. The situation is not the same in all regions. Some petrochemicals are traded on a global level. Some petrochemical products or front-end products from the steam cracker, like ethylene and propylene, are consumed regionally. This is due to high transportation costs that require them to be transported via pipeline. This difference creates regional differences in the cost of producing the olefins between the regions of the world. North America and the Middle East are advantaged by low feedstock costs, as you heard earlier today. In the U.S., it's due to the abundantly available ethane and other natural gas liquids, which are byproducts of natural gas production and shale gas. Europe doesn't have this feedstock advantage. Their primary raw material is naphtha, a crude oil derivative, and they are characterized by lower demand growth. Asia is a high demand growth region. Naphtha is still its key raw material, but as you know, they are looking into coal to olefins plants, but there still remains some questions about the capital intensity of those plants and the environmental footprint of those plants. It's clear, though, that the North America region has established a competitive position and will continue to enjoy that position as long as we stay moving forward. So now I'd like to turn it over to Andre, who is BASF's North America Vice President of Basic Petrochemicals, and he'll speak to you a little bit more about the U.S. market.
So good afternoon. So yes, I want to take a little bit closer look on the petrochemicals market in North America. And I realized when I listened to the presentations this afternoon that some of my slides are to some extent similar to what we heard from Nick Vaviades from IHS. But what I want to do is to give a little bit more a view from a producer, investor in petrochemicals, and which is maybe in some areas also a more critical view on what's going on in the petrochemical industry in North America. Last week, a trader from my team actually went over to Germany to a global trader conference within BASF, and yesterday I saw him and asked him how it went. And he said, well, it was good. So in the years 12, 13, 14, 15, we spoke only about shale gas and tidal and what's going on in North America. In 16 and 17, we spoke about Donald Trump. So don't worry, I'm not going to give you, or I won't speak a lot about Donald Trump now. So I really would like to go back to shale gas because I think we all should remember the boom we are seeing in petrochemicals, the boom we are seeing in the Port of Houston. The origin of all that is the ability to extract at low cost shale gas and tight oil, which includes a lot of associated gas, here in Texas and in other places in North America. And it's truly impressive what we see in the Eagle Ford area, but lately also in the Permian Basin, with huge production growth, and that is clearly benefiting the petrochemical industry. Looking at the left, on the left side, that graph you see there, natural gas in itself is not feeding a petrochemical plant, a steam cracker. It's the liquid components included in the natural gas, the ethane, the propane, the butane, the natural gasoline. As you can see on the graph, production volumes over the last 10 years doubled. And that's enormous. Huge amount of additional feedstock, cracker feedstock. And don't forget, the supply went up, demand is not growing that quickly because we still have the same base of steam crackers in North America. And propane, butanes are products which can be exported, but you need also export terminals for those, and they need to be built. So what we see is additional supply, not additional demand. The law of economics is going to apply, and prices go down, hugely to the benefit of a petrochemical producer. And you see that on the right graph. And if you look at the green line, that's the cracker margin for producing ethylene on a cash basis. Cracker margins increased from a relatively low level, some of the lowest in the world at the beginning or at around 2007, to almost $800-900 per ton in average in 2014. Huge earnings for the petrochemical industry. At $800 to $900 per ton margin at a plant which is producing 1 million tons, that's a lot of money you can earn. And what companies do when they earn a lot of money, they want to earn even more money. Makes sense. So they say then let's invest. We have all that cheap ethane here in North America, let's invest more. Does any one of you know when the last steam cracker was started up in North America? Sorry, in the US? No guess? 2001, 16 years ago. Actually, it was a BASF steam cracker together with Total in Port Arthur. We started up the BTP steam cracker. So for 16 years, there was no cracker starting up in North America, simply because the industry was not that profitable. That all changed. We have now ethane, propane, butane, and suddenly we don't get only one new cracker, we get directly 11. That's quite a bit. So we are increasing our steam cracking capacity by 40%. And that's a lot of capacity being added, and that's creating new constraints, and I really would like to talk about those on the next slides. So just want to point out the good news about it is like we have 11 new crackers. We also get all the ethylene derivative capacity. We heard that from IHS. So overall, only in that area, we expect about $50 billion of investment. That's a lot of money. And to give you some more figures, those were compiled by the American Chemical Council, looking at the overall impact of shale gas on the chemical industry. And you can read the numbers yourself. It's truly impressive. $185 billion in new capital investment, almost 500,000 new jobs, $310 billion in new economic output per year, and also governments are benefiting from that, $26 billion of new tax revenue per year by 2025. Only good news. And we talk so much about this big investment wave. So the wave is coming. We're actually already in. The first cracker started up already. 10 more are coming. But now the big question is, are we really ready to ride it? Because there are challenges. It's not that simple as it looks in economic models and in spreadsheets. We saw that graph before from IHS. The business model behind that is we're adding 40% of capacity, but there is not enough demand in North America, so we have to export it. Business model is I take cheap ethane, I convert it into ethylene, then I convert the ethylene into polyethylene, and then I put it on a ship and bring it over to China. That's, in short terms, the business model. But that only works if we are competitive. And to export material, there are basically two models which work. Either I produce a product which is unique, high quality, better quality in the rest of the world, which is not really the case for polyethylene. In some areas there are some specialties between them, but mostly it's a commodity. And if I produce a commodity and want to export it, I have to be cheaper. Very simple. So, cheaper meaning competitive with ethylene, polyethylene production in the rest of the world. This graph, it's also similar to what we saw before, is showing the global cost curve for producing ethylene. The green line are all the steam crackers in the world. On the left side, we see the low production cost crackers, and then moving further to the right, the cost for producing ethylene goes up. And generally speaking, about 60 million tons of ethylene are produced in North America and the Middle East, where we have the cheap feedstock. And then we move further to the right, we heard that before, in Europe and Asia, the crackers are using naphtha as feedstock, and it's following crude oil. Naphtha can be used in gasoline. That's really the alternative for the naphtha producer. We see that the cost for producing ethylene goes significantly up. So a huge advantage for the North American cracker, and we saw that in the earnings, the years 12, 13, and 14. But that is all based on a crude oil price of $100, 2014. Those were the good times. Now let's look at 2016. Pretty much a flatter curve than in 2014. 16 had an average crude oil price of $44. This year, I think we are around $50, so very similar. Very flat curve. There's still an advantage in North America, but it's not as high as it was in 2014. And don't forget, that's only ethylene production cost. Now you have to take the ethylene, make the polyethylene out of it. You have to put it into bags, bring it, ship it to the port, load it, bring it over, pay an import duty, and then you have to compete with a producer over in Asia. Another factor driving competitiveness is the cost of the investment. And as you can imagine, if 40% of capacity is added in only 4 years, there is competition for resources. And if there is competition, more demand, prices, costs go up, and exactly that is what happened. The red line is showing the increase of total investment cost for a petrochemical plant in North America. It went up 30%. The installation cost, where we need most of the labor, went even up 70%. Very simple, high demand, not enough qualified workers, increased wages, but even more important, labor was used not as qualified as before, and then that impacted productivity. looking at the 11 projects which are about to start up in the next year, I think most of them are above initial budget and behind schedule, a result of that crunch, high demand for construction labor. So that was the view on a rough view from a producer perspective, what happened in the last years. So let's try to take a look into the future. I'm not as brave as the colleague from IHS who had already a view until 2027, so I will do that rather with some questions which we are asking ourselves before moving into new projects. So where's the crude oil price going to be? Who dares here in the room to say it's going to go back to $100 per barrel? Yeah, I don't know. I really don't know. Probably right now what I'm seeing, there are no signs that the crude oil price will move back up to $100 anytime soon. And we saw the big impact the crude oil price has on the competitiveness on the project. Another big question is availability of qualified labor to build all these new plants. And there's another question we have to ask ourselves. Do we have actually qualified people to run all the plants? And we haven't. 16 years, no new cracker. And we're seeing this in our plant. People, the generation who started up the cracker is retiring right now. So where are all the people? Who qualifies? Who educates them to run those units? Demand is important. We need demand growth to absorb that capacity. I think overall, I concur with IHS that we will see significant demand growth in Asia. And in general terms, the world needs 3 to 4 world-scale crackers per year on a global basis. What we're going to see is that all those crackers are going to be built in North America in the next years. And we will see some other crackers also in the rest of the world starting up. So we will see in a couple of years overcapacity, lower prices, lower margins. But with that strong demand growth, I would say in 3, 4, 5 years down the road, everything should be back in balance. Oh, there was one too quick. The ability to export ethylene derivatives on a large scale to Europe and Asia, there are logistic challenges. Clearly, in the first years, I wouldn't be surprised if we see congestions in ports, on roads, to ship all that material around here in the US, but also on the other side of the ocean. And one important aspect is also global trade. There's a lot of discussion in politics about global trade. This is an export-driven business model. If there is any limitation in the interest of the world economy to support global trade, it will impact the petrochemical industry in North America because we have to be competitive with local production in China. And if there are import tariffs or something like that, it will impact the profitability of the business. There's one more question, ethane. Ethane is cheap. I've been here for 4 years. Ethane has always been cheap, all the time. But we haven't seen additional demand for ethane. The demand is coming now from the new capacity, and also we're seeing ethane now being exported to Asia and Europe at a larger scale. So nobody really knows what is going to happen with the ethane price. We have nice models economists come up with. Hopefully they are right. They predict a modest increase of the ethane price, but we really have to see because this is new, uncharted terrain we are moving into. Last but not least, those are all rather macroeconomic things which we cannot influence that much, maybe with a little exception on labor and qualified labor. But I've always learned, let's not focus on the things we can't control, let's focus on the things we can control. And that's really the question we as the industry have to ask ourselves, what we can do, what is our homework we have to do to stay competitive and to ride successfully through this big wave, which is certainly coming. And with that, I hand it back over to Heather for some final remarks.
Thank you. So as you heard Andre reference, there's numerous challenges facing the industry today and heading into the future. But all of these challenges provide an opportunity for industry and government to work together. Access to competitive feedstocks, infrastructure, workforce development, sustainable footprint, low carbon footprint, innovation, technically, process-wise, digitalization. All of these areas are areas that we can work together to continue the U.S. and particularly the Gulf Coast's position on the global stage. So we look forward to continuing the dialogue with you. Thank you for your time. And certainly as we move forward, may God bless you and your families, your employees, and certainly the whole Gulf Coast as we continue the recovery from Hurricane Harvey.
Now, while I've got them both here, I'm going to go ahead and ask the question that I know is on half the room's mind. Both of you have an international viewpoint of the market. It's an opinion. We get it. But what could you do from a workforce development standpoint that's not happening now? Germany has some unique principles. I know in the community college systems, we've studied it and studied the apprenticeship model. One sentence, real quick. What could we fix from workforce development if you were king for the day, Heather?
I would accelerate. I mean, pure and simple, there are wonderful programs out there. There's wonderful partnerships out there with junior colleges, technical schools, universities. I think we have an opportunity to accelerate on those fronts and certainly continue to position the workforce for the coming wave, current wave and coming wave of investment.
Yeah, Germany has a very neat model in educating workforce. There is a big focus on educating, developing people to work in plants. It's a career, it's a profession, and I think that's done very successfully, and it's one of the few things I'm really proud about what is done in the German industry. But I can only concur with Heather. We need to speed up, and if we see those big waves coming, we just have to prepare our people to do all the work, because that's at the end the driving success factor.
Thank you both very much.